Lenders 20 questions on pass-throughs and K1s, video number 20. Why are guidelines so different from one financial institution to another on what to use from the K1s, whether to use those or the full returns, and how to calculate cash flow for the business? Well, first of all, you noticed they're dramatically different. So let me give you some reasons why that might be true. One is volume. I know that Fannie Mae has some simplified approaches to tax return analysis that, given the huge volume they do, makes sense. It simplifies and eases consistency. But you know what? Some of the things Fannie Mae might do, you might not want to do if you're doing a portfolio loan, because you don't have that many to spread it across. Another difference might be your financial institution's sweet spot. Who are you after? For example, several of my clients work with primarily wealthy individuals, high net worth, high income. There's a lot of unsecured lending in that regard, but they want to see really low loan to values, really high credit ratings, good debt coverage ratio. They've got some really conservative guidelines, but they work really well in that sweet spot. It could be your geographic region. It could be the lending you tend to do. So those are all reasons for different guidelines, and as long as everybody in your financial institution is applying the guidelines that you do have across the board, and of course they're legal, then there's nothing wrong with different guidelines. And the big challenge is when you have people being hired from elsewhere, that you get everybody on the same page as quickly as possible. While we're on the subject of guidelines, I would ask you a question. Are the guidelines at your financial institution more guides, or are they hard and fast rules? Sometimes when you first learn them, they seem to be hard and fast rules, but as you go, you realize that you have the latitude to bring some judgment to bear on some of these things. So I figure out pretty quickly, where are the guidelines, and I have some flexibility, and where are we really talking hard and fast rule? And finally, the regulators are really paying attention to guidelines, and rightly so. What they want to see, besides that they are actually legal, is that the guidelines and policies and procedures related to tax return analysis at your financial institution are clearly communicated and consistently applied. So that's a question I'd have for you. How clearly communicated are the guidelines? Do you just stumble across them? Is there some kind of great Excel sheet that lays it out? How do you find out how it's done at your financial institution? And are you guessing that they're really consistently applied across the board by all your lenders in the various types of lending that they do, and with the different types of experience they have? Because that is the key. The guidelines can vary as long as they're legal, but once your financial institution has them, they need to be clearly communicated, they need to be understood, and they need to be consistently applied. If you enjoyed this information and you would like to receive all 20 free videos of the top questions lenders ask and should ask about business, personal, and global cash flow from pass-through entities, along with a copy of my tax return analysis quick reference guide, visit the URL on your screen.